Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Tesla report for Friday, November 17th, 2023. But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already, subscribe to the Wicked Stocks YouTube channel, share the content if you would with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever. On with the charts. By the way, this week we put out 2 stock picks, Mosaic and Stryker. We do 2 every week. You can check everything we've done out for the last month, 2 or 3, by going to wickedstocks.com and taking advantage of our 5-day free trial. Let's take a look at the Tesla charts. Big picture, work our way into the day itself. A reminder that about a month and a half ago, we closed below this meaningful 10-month channel bottom. That is this week, rising weekly at 259.91. It's higher on the daily chart, below which we had been anticipating the 179.36 channel bottom. But along the way, we managed to close above a descending 1/3 speed line. So coming off that late October low, we topped out at the descending 1/3 speed line, a new speed line based on the 2 extremes, July 23 high against the more recent October low. We closed above it just about a week ago, and that set off a buy signal through the rest of November into December trade, a 3 to 5 week buy signal into the 259.91 to 268.45 region. And in fact, on the daily chart, it's more like 263.48 up to 268.45. It is in the low to upper 260s, and it is considered a 3 to 5 week objective above 216.61. The question, of course, is will we fall back to 216.61? And I'll take you to this chart here. Now, in hindsight, we've got a 50% upside retracement at 246.68 that did contain this week's highs. At the time, that was the Wednesday high. We called that an intraday resistance because of the fact that we settled above this rising channel top that we had considered to be our base of support through the balance of November, and above which we were expecting 268.45 within a couple of weeks. Now, we obviously fell away not only from the 246.68 50% retracement, but we also broke back and settled below this 240.90 rising channel top. And so the point I really want to make is I do think you can prepare for, or at least consider the 216.61 level to be in reach by the end of next week or sooner, following this failure and the holding of the 246.68 50% level. So 240.90, though, I've reduced to an intraday resistance area, and below which I do think that the 230.61 level is in reach again. This level did contain, or came close to containing, intraday selling pressures on Thursday. The low was 230.96. 230.61 able to contain intraday selling. 240.90 able to contain intraday strength, well equipped for aggressive day traders. You could buy 230.61 perhaps and sell 240.90. If we push through 240.90, expect a test of 246.68 where we can again top out on a daily basis. And I will say that if we close today above 246.68, then we should, by the end of next week, reach into that lower 260s to upper 260s area. Lower 260s is this long-term channel bottom we settled below about a month and a half ago. And of course, the upper 260s is this new descending channel top. This upper area, if we close above 246.68 today, and I don't expect it, given what's played out over the last day or two, especially in light of the settlement back below this near-term channel top that today is at 240.90. I'll just be honest, it was a bit of a head scratcher for me today, whether to come into Friday anticipating 240.90 as a session containment level or intraday. I want to give the market breathing room, and I do think that if we were to play the long side into next week at this point in time, and you have no position whatsoever, and you're looking to go long, I'm more comfortable telling you to go long now above, with a settlement above 246.68. Yes, there's a case to be made where the settlement above 240.90. That would also be above Thursday's high of 240.88. So it does have an upward pivot point quality into next week, but better to be safe than sorry. And I want to say that closing today above 246.68 is our upward pivot point into next week. Once again, the upper 260s expected within a full week of closing above 246.68. 246.85, 268.45, sorry, is a level we've been anticipating anyway. And you may be long from just about a week ago when we closed above the 216.61 level. And if we reach up into this area in the upper 260s over the next week or two, it is a zone to unload your long position and consider playing the short side as we move through the rest of the year. We can top out in the upper 260s into January trade and fall off from there in a meaningful way. Now for the downside, once again, if we were to, wrong chart, if we were to break 230.61, and there's a case to be made for that, I'll say once more time, given the fact that we closed back below this channel bottom, this channel top, that definitely eliminated bullish momentum and does carry with it the possibility of bearish continuation over the next several days, 3 to 5 days, into the 216.61 region. And so breaking 230.61 is certainly possible. And if so today, I would expect 260.60. 260.60 is a downside 3/8 Fibonacci over the last several weeks, from the late October low to the more recent high that was put out on Wednesday. It is well equipped to contain daily selling pressures. And I say this in light of the fact that it also is consistent with this high area from about a week and a half ago, before we broke back and then gapped above that entire area entirely about 4 days ago. 226.60 able to contain session weakness. I wouldn't fall in love with this as a level able to contain selling into next week. I wouldn't go home long over the weekend and into Monday, Tuesday if this area holds. I really think you should wait for 216.61 to 218.40 as your bottom picking zone. And that is to say, if you're a 3 to 5 day swing trader, 3 to 5 day swing traders, as I mentioned before, have a case to be short right now below 240.90. As I said before, anticipating 216.61. And so 216.61 is preceded by 218.40, a rising channel bottom that can absorb selling through all of next week and even into December trade. It is the area that if you're a 3 to 5 day swing trader, perhaps you're short now, you're covering in the 216.61 to 218.80, 218.40 region, not only covering, but perhaps reversing and going long. This is a good bottom picking territory, 216.61 to 218.40 through next week, and we could come off of here nicely as we move into December back into the 260s, 268.45, dropping daily. Now, we're not going to see it today, but if we were to close today or any day back below this 216.61 descending 1/3 speed line, we've got a good November high, and we should, over the following 2 to 3, 3 to 5 weeks, continue south to this once anticipated 180.66 descending channel bottom. That is a formation that I mentioned earlier at the top of the video that is on the weekly chart at 179.36. So I'm getting way ahead of myself here, but I'm just giving you the heads up that if you're a 2 to 3, 3 to 5 week swing trader, you're bottom picking 216.61 still in anticipation of the upper 260s. But if we were to close below 216.61, 2 to 3, 3 to 5 week swing traders liquidate a long position, go short into the upper 170s. That's a 2 to 3, 3 to 5 week play to the downside where we could bottom out through all of January trade. I think I've said it all. Please click like, share, subscribe, and check out wickedstocks.com. I'll be back on Sunday afternoon with Monday's Tesla, and you have a great weekend.